Day 3 out of 5. Base candle or leg candle. I said leg candle so many times yesterday and I never actually showed you how to spot one. Today we're gonna fix that. First, let's recap where we left off yesterday. Balance is the loading zone where the orders are getting filled. Imbalance is the result, is where we push off after breaking out of the range. A real explosive move needs leg candles and a new high or a new low being created there for you to consider them. A gap is imbalance so extreme that zero orders get filled. First things first, you must understand the anatomy of one candle, okay? And it's four pieces of information. That's all that a candle is, okay? The open, that's the first order there, the first price that the order got filled, okay, in that interval. Everything is for that interval. The high and the low are the furthest price traded in each direction. And the close is where the last order got filled. The price the last order got filled. Okay? Now here's the thing. One of those four, the close is the one that actually matters. And almost everything I teach you from here comes down to where a candle closed. Okay? The body is open to close. The wicks is everything that price tried and failed to hold. Okay? So you're going to see the shade there. Now, those four pieces of information can arrange themselves in four different ways. The first one is no body. A doji candle, opened and closed at the same exact price, total indecision there, okay? All body, no wicks. The open and the close are also the high and the low. Price went one way and never looked back. One wick, either the open or the close is also the high or the low. And two wicks, high and low, are both distinct from the open and the close. Price went in both directions and settled in the middle. You don't need to memorize every single one of these. You just need to notice them in the charts, okay? And keep in mind, it's not that much. It's only four things here that you gotta look at. Alright, now here's the part that changes how you're gonna read a chart. Stop asking if a candle looks strong. What you're gonna do is you're gonna take the candle's full range, high to low, then ask yourself one question. Where in that range did it close? Did it close in the top 80 to 100% of its range? That's very bullish. Did it close within 60 to 80%? Bullish. 40 to 60%, that is the middle, that's neutral. Nobody won. 20 to 40%, it's bearish. 0 to 20, very bearish. Okay? And here's why this matters more than anything else. Because color lies. Okay? A green candle that closes at 30% of its range, that's a bearish candle. It's green, it closed higher than it opened, and it's still telling you that the sellers won. It's a bearish candle, okay? And most traders will never know that because they're reading their candles by colors instead of reading by location, okay? So now that you know how to read a candle, let's group them all together. Three words, okay? That's the entire vocabulary. Rally, a series of candles closing consistently higher. The candles do not have to be green for it to be a rally, okay? Only the closes there matter. Drop, a series of candles closing consistently lower. Same thing as a rally, just going down. They don't have all to be red. They do not necessarily need to be red candles as long as they're bearish and price is dropping, that is fine. Base, a series of neutral candles moving sideways. It's usually red and green mixed candles there together, and none of them are going anywhere. Okay? And rally, drop, base. That is it. That's the whole language, which brings us to the most single important distinction in this system. Leg candle or base candle. Leg candle. A leg candle has a big range. The body dominates it and it closes near its own extreme. Okay, that is in balance. One side won decisively there. Strong. A base candle has a small range and it closes inside the range of the candle before it, and that is balance, okay? Orders are getting absorbed in that candle, nobody is winning. Lag equals imbalance, base equals balance for you. And if you miss that distinction, every single zone you draw for the rest of your life is going to be in the wrong place. That is not an exaggeration, that is literally what happens. Once you see it, something clicks. A change of direction is just a change between a lag candle and a base candle. That's all a reversal is. Watch. Price legs in, it bases, then it legs out. Leg in gets price there. The base is where the orders are getting filled, and the leg out is the proof that it worked. Rally, base, drop, drop, base, drop, drop, base, rally, and rally, base, rally. Four combinations. And that's every supply and demand zone that exists on the charts, any time frames ever. But that's for tomorrow, okay? Today you just need to be able to call the candles. So let's find out if you can. 12 candles, one highlighted in each, and you're calling three things out: leg in, leg out, or basin. Pause the video right now, write all the 12 down in the comments, and then watch the review, okay? Not after, before. I don't want nobody cheating, and I'll know. Here is 1 through 6. Take your time. You got them? Alright. Now we have the answers. Number 1, it's leg in candle. Okay, it's a big red candle bringing price down into the base. Candle number 2, it's a basing candle. Okay, it's small. It closes right inside of the range of the previous candle and it doesn't go anywhere. All right. Number 3, it's a leg out candle. It's a big green candle there, leaving the base. Candle number 4, also leg out. You can see the base there, and then a strong leg out when the candle takes on off. Number 5 there, that's a leg in candle. Okay, it's green, it's big, and people can call this a leg out, but it comes right into the base there. You see how it goes up and then it bases and then it goes up again. Correct? And then number 6, it's basing, it's small, red, and it's sitting inside the previous range. Okay, so it's a base candle right there. 6 more, and these are harder. Take a look at them. Lock them in. Let's go. Number 7 here, it's a leg out candle. Okay, it's big, red. It's dropping away from that little base above it. Number 8, okay, it's basing. It's a small green inside the prior's range. 9, okay, also basing. And look at this one properly. It's small, it's a small red candle, and right next to it, it's a huge green one, okay? Your eyes go straight to the big one every time. But the highlighted candle closes inside the previous range there, absolutely going nowhere. Basing candle. 10. It's a leg-in candle. It's big, green, and it delivers price up into the base that follows, okay? 11, basing candle. It's green as well, and the real leg out is at the end. Okay, this one that's highlighted is just absorbing the orders there. And 12, leg in. It's a huge green candle that takes price up, basis, and then drops. Okay, count them up and comment your score. If you got less than 9, watch this video again before tomorrow. Okay? I just want you guys to have everything down because tomorrow is when we start supply and demand. So let's lock it in because on day 3, we talked about 3 things. Number 1, where a candle closes in its own range is where you read it, not the color. 2, leg candle is in balance. Base candle is balance. Okay, that's the whole distinction there. 3, leg in, base, leg out in 4 combinations, and that's every zone that exists in the market. That's day 3. Tomorrow, day 4, we're going to talk about the only 4 patterns that create a real zone: RBR, DBR, RBD, DBD. every supply and demand zone on every chart you're ever gonna look at is gonna be one of these four. Nothing else is gonna count, okay? And we have 12 more days to go, so I'll see you tomorrow.